Hi grade 11 student. So in this video we are going to do question 3 from the question paper that was written, guys, on April 2021. So normally this is a term 1. Normally in other years you will find that this test is being written around March. So remember, during 2021 and 2020 we have a COVID-19 problem, so that's the reason why this test was written around April. Okay, so in this video we are going to do only question 3, so please make sure that you go to grade 11 playlist so that you can check other questions, because I do a question per video so that it will be easy for you when you are searching for a partnership topic or for certain topic that you are looking for. All right, now let's read the information. They said a financial accounting of partners. Then they said you are provided with the information related to DD traders. A partner are D Duwe and D Shungwane. Okay, we have only 2 partners. I have note that the financial year end 28 February 2021. This business use a markup of 30% on cost at all time. Okay, then required 3.1, list 2 advantage of partnership as a form of business ownership. I think you know this one even from grade 10, because in grade 10, of course, under a business studies. So for those who are doing a business studies, you did advantages, characteristics and disadvantages of different form of ownership. But for grade 11 in accounting, guys, we only focus on what? On partnership. All right, now let's look at the advantage side. They said they are looking for only 2. The first one is that you are going to share idea with your partner. Of course, if you are running a partnership, you are going to be a partner with someone, which means that both of you are going to contribute idea. This can lead to a very successful business, guys, because someone is contributing another idea, someone coming with another idea, then it become together and you make a good business. Okay, then the second one, you are going to share liability of the business. Why is it good to share liability? Remember, guys, it can happen that when you are running a business, anything can happen. So if anything bad happen and you find that the business is on debt, which means that you are not alone in that case, which means that you and your partner, you have to make sure that you contribute so that you can pay that liability. For example, if you are owing a 10 rand, which means that you are not going to contribute that 10 rand alone so that we can pay a debt, but you are going to share 5 rand each so that it make 10 rand and you pay the liability of the business. So it's good idea. So we have many advantage and many disadvantage. You have to make sure that you do a revision about that, because you don't know if the test that you are going to write, they will ask a such question. Okay, now let's move on to 3.2. okay, 3.2, they said analyze the following transaction for the year end 28 February 2021 according to the table provided in your answer book. Okay, so in this case, guys, in grade 11, normally they're not going to teach you analysis of transaction, or you can also call it accounting equation, but they're just going to ask you in a test because they know that you did it when you are in grade 10. Okay, you have to make sure that you do some revision about this. So this is the table that they provide to us. So the principle that we are going to apply here is the same principle when we do our accounting equation. Okay, let's start with number 1.2.1. okay, let's just assume that is 3.2.1 up to 4. As I name here, you can see that it's a mistake to name it 1.2.1. okay, because this is question 3. Okay, transaction number 1, they said commission of 1,400 has been received on advance. Okay, like in advance is the same. Okay, so this 1,400 has been received in advance, which means that it's for another reporting period. Now what do we do? in this case. Remember, if something has been paid in advance in income statement, we have to go and subtract in our bracket. Okay, so how is it going to apply here? Remember, on our accounting equation, we said assets increase on the debit and decrease on the credit. Okay, and equity, we said expenses come this side, income come this side, and liability, we said liability increase on the credit and decrease on the debit. Okay, now they're saying that commission has been received in advance, which means that the liability has increased. We haven't yet performed this commission, which means that we raise what? Our liability. We still owe these people to do what? Our commission, which means that liability has increased by what? Income received in advance. Okay, let's start by amount. Amount is 1,400 and our liability has increased. We're gonna say income received in advance. You can also call it deferred income. Is the same name. Income received in advance and deferred income is the same. Okay, then which means that the debited one must be commission income. Commission income. If we credit, we also have to do what? To debit. All right, then number 1.2.2, interest on mortgage loan is owed for 1 month and interest is capitalized. Okay, for this one we have to check our information. Okay, the information that we have, they said mortgage loan under our pre-adjustment balance is 800,000 and is 7.5% per annum. Okay, which means that for this one, of course, we have to do this calculation. 800,000 multiplied by 7.5% is gonna give us interest per year, and after that we have to divide by 12 so that we can see it's gonna be how much per month. Okay, so if you do this calculation, you're going to get amount of 5,000. If not mistaken, it's gonna be 5,000. So you have to make sure that you do recalculate this one, because I didn't write it down. Okay, but I still remember, I think it's 5,000. Okay, but this is how you should do the calculation. You make sure that you divide by 12. Why? Because the transaction said, let me read it again. The transaction said is owed for 1 month, which means that when you divide by 12, you are looking for 1 month amount. All right, now because this amount, they said, it still need to be capitalized. In other words, we still have to record it. Expenses are recorded under equity, which means that interest on loan must be debited. Interest on loan, always, guys, expenses come here, income come here, unless it's a reversal. Okay, then we credit a loan. Why credit a loan? Because our liability has increased. Interest increase liability because now we are going to pay more money. Okay, then now 1.2.3, the business currently has one tenant who pay a rent of 6,000 per month. Record the appropriate adjustment. Okay, what do we do for this one? We have to check our pre-adjustment trial balance. Okay, they said the amount of rent income is 84,000. Okay, and they said this person pay amount of 6,000. Okay, what do we do now? We have to take amount of 84,000 and we divide by 6,000, and we see how many months is it going to give us. It's going to give you 14 months. Is it appropriate to record 14 months? No. In accounting, we have to make sure that we record only 12 months, because in a year we only have 12 months, which means that another 2 months must be subtracted. 2 months must give us how much? 6,000 multiplied by 2 is going to give us 12,000 of 2 months, which means that the amount here will be 12,000. Why do we have to divide by 6,000? In order for you to check a month, so that you can see how many months do we have to subtract or how many months do we have to add. If month is 11, which means that we were supposed to add another month so that it can give you 12. Because now it's 14, we subtract to go back to 12. Okay, that's what you do. Okay, now because amount of 12,000 must be subtracted, what do we call it? We call it income received in advance. We receive income in advance. It's similar with this one, which means that our liability has increased because this person hasn't stayed for this month, for these 2 months. We still owe that person. If that person come back and say, hey, the money that I paid for next year, I want it, I'm not going to rent here, which means that we have to pay the person back. Okay, we have a liability to this person. Okay, it's gonna be a rent income. Okay, and this side income received in advance. Okay, another person can say, why is rent income on the debit side? Because I say debit side is for expense. This is not a normal transaction, but a reverse. It was paid in advance, which means that we have to subtract it when we go to income statement. And when we subtract, it comes this side. It's like we recorded more this side. Now we have to go back to the other side. Very simple, guys. Okay, so 1.2.4, before we go to appropriate account, let's do this one. They said Klungwane took trading stock with the selling price of 7,800 for personal use. All right, now we have to record these drawings. How are we going to record these drawings? Very simple. Okay, remember they said the selling price is 7,800. We don't have to record 7,800 as it is, guys. Why? Because we have to record drawings using a cost price amount. Okay, remember on top they said a markup is 30%, which means that to go down we have to say 100 over 130. Then it's gonna give us 6,000 that we have to record. Because we are looking for cost, 130 come on the downwards. It's always 100. We just added the percent that they give us. Simple. Okay, because it's drawings, he took what? A trading stock, which means that our asset is decreased because trading stock is asset. Trading stock. Okay, and this side will be drawings. Simple. Okay, now we are going to appropriate account. I know that most of you are looking for this one. Okay, but before we proceed, guys, please make sure that you also support us by subscribing, like this video, and if you haven't buy a study guide, guys, please make sure that you buy a study guide. We have a study guide from grade 10 up to grade 12, so make sure that you get your own copy, very cheap, guys, so that those who buy a study guide, we also have another group that we are adding everyone who purchase a study guide, so that if you want to consult anything that is related to accounting or that is related to any questions that is on the study guide, you can be able to get assistance very quick on our WhatsApp group. So please make sure that you purchase it so that we can add you immediately before it's too late. Okay, now let's proceed. Okay, we are going to 1.3, which is 3.3. Obviously they did mistake on numbering here. They refer to information B. Complete the missing detail amount label A to F in the appropriate account of DD Trader for the year end 28 February 2021. Show calculations where necessary. Okay, so part marks can be awarded. Okay, now let's go to the information. As you can see, they give us appropriate account which we need to fill it up. Okay, number A, they don't want amount, but they want a word that we need to write on number A. What do we write under appropriate? Obviously, you must know the format. You must make sure that you know the format, guys, so that it can be easy for you. So it's a profit or loss. We write profit or loss on our credit side. Okay, then number B, they are looking for interest on capital. Interest on capital is for both partners. Okay, which means that we have to go into additional information as per partner agreement. Number 1, they said interest on capital at 10% per annum, and note that Dove had increased capital by 200,000 on 1 September, and this capital has been recorded. Okay, let's start by Dove. Let's start by Dove. Dove is the one that they said he increased his capital. It was how much? In total, it was 600,000. Okay, and before he increased 200, which means that it was 400,000. They say that this person increased it on 1 September, which means that from 1 March, because our period starts from 1 March 2020 until 28 February 2021, which means that if you count from 1 March until 30 August is 6 months, which means that we are going to say multiply by 10% and multiply by 6 over 12, and you will get the amount of 20,000. Okay, then this is before increase. Then after increase of 200,000, okay, the percentage is still the same, and from 1 September until 28 February is 6 over 12 as well. Okay, and it's gonna give you 10,000. Okay, then let's go to another partner. Another partner is Hlungwane. Okay, is it Hlungwane? Hlungwane didn't increase any capital during the year, which means that it's just gonna be 600,000 of total multiplied by 10%, which is going to give us 60,000. Simple like that. Okay, then which means that in total this will give us 90,000. Okay, then number B is complete. Then number C, they said salary for Dube. Okay, bullet number 2, Dube in salary of 15,000 per month, which means that if they give us monthly, we just say 15,000 multiplied by 12, and it's gonna give us amount of 180. Simple. Okay, then number D, salary for Hlungwane. They say Hlungwane in a salary that is 25% more than earned by Dube. Okay, which means that he earned 180,000, but include what? 25%. Okay, which is going to give us 225,000. Very simple. Okay, then number E, bonus for Dube. Dube received a bonus equivalent to 60% of his annual salary. Okay, and they said 180 multiplied by 60%. Remember, Dube is the only person who is going to inward a bonus, and they said bonus is 60% of his salary. His salary is 180. His annual salary is 180 and it's going to earn 60% bonus, which is going to give us 108,000. Simple. Okay, number F, they said current account for Dube. Current account for Dube and current account for Tungwane. For Tungwane, they give us 35,000. So under a current account, guys, we write a profit share. Okay, the remaining profit share. So if you read the last part, they say the remaining profit and loss are shared between Dube and Tungwane in the ratio 2:1. In other words, Dube received 2 times of what Tungwane received. Okay, Tungwane received 35,000 in this case, which means that Dube is going to receive it times 2. Then it's gonna give us 70,000. Very simple and straightforward. So please make sure that you also check another video that I did for appropriate account and for term 1. This video, guys, is very appropriate for exam preparation as well and for June examination. So thank you so much for watching, guys. So please don't forget to come and buy our study guide so that it can help you, because the study guide, they have a solution and many questions, guys, that is going to prepare you to write a test and examination. See you on the next one.